Hello there, do you like my new look? I like it. I decided to change a little bit of my look, my appearance. Instead of just sitting here in front of you guys and talking, I wanted to make a change. So welcome to this video on Stochastic Oscillator. In this video, we will cover everything you need to know about the stochastic indicator, or let's say oscillator, because it oscillates, including what is it, how it works, and how you can use it to improve your trading strategy. The stochastic indicator is a technical analysis tool that is used to measure the momentum of a particular asset or security. It was developed by George Lane in the 1950s and has become a popular tool among traders ever since. The stochastic indicator works by comparing the closing price of an asset to its price range over a set period of time. The indicator then calculates the percentage of the price range that the closing price falls within. The calculation results in a number between 0 and 100, which is used to determine whether the asset is overbought or oversold. The stochastic indicator is made up of two lines, the K% line and the D% line. The K% line is the faster of the two lines and it is calculated using the following formula. The D% line is the slower of the two lines and is calculated by taking a 3-period simple moving average of the K% line. The result in a line that is smoother and less volatile than the K% line. When the K% line crosses above the D% line, it is considered a bullish signal, and when the K% line crosses below the D% line, it is considered a bearish signal. Now let's go to the chart and see what is it all about. Well, just like my previous suggestions, if you haven't watched my previous videos about the other trading indicators or the previous videos before that, please go check them out first, because knowing the definition of RSI indicator, moving averages, MACD indicator, they're going to help you a lot better to understand the concept of this very indicator, which is the stochastic. Just like before, we're going to click here on indicator part and we simply write down a stochastic, this one here. We have lots of them, and you can see here stochastic RSI, which I'm going to talk about later on. So stick with me until the end of the video. We're going to talk about a lot about these two. But first, with the stochastic, we make it favorite, click on it, and it's gonna pop down here. As you can see, let me bring it up. So just like RSI or even like MACD, it is again the same. We have one line down here, one horizontal line above here. So when the price goes above it, in some cases it's at the level 70 and 30 in some indicators. In some indicators in that 20 and 80. It depends on the written algorithm and the programming. By the default setting is this, and when the price goes above it, it means that it became overbought, and when it goes below it, it means it become oversold. So we can just trade like this. Let me mark this area here. For example, here is the price. This area, it was overbought. Let's bring the chart up. And could we just go for a sell trade here? No, we can't. Sometimes it works, sometimes it doesn't. In some cases, for example, here it was an oversold, and if you enter the trade here, it was a win. And where to put the target point, it is not for this sessions. We only want to get to know the trading indicator. Later on, we're going to talk about money management, risk management, and we're going to get to know where to put this. But some cases like this one, if you wanted to take a short trade here at this particular moment here and waiting for a red candle, let me zoom in. If I wanted to take a trade here, so we would probably look back on the chart and see, okay, here was some point, so I'm gonna put my stop loss here, but it would have taken my stop loss. So it is not that much reliable. The other way to trade with it is just like the RSI, waiting for divergences, where you wait for the divergence in comparison with the price and the stochastic indicator. We have a beautiful case, for example, here, as you can see. So this is one high and this is another high, the second high. So if I just put a line here, then we look down here, it's a higher low. So this is a divergence and we can rely on it as a potential signal and go for a short trade. But you have to combine it with support and resistance areas. If you don't know how to, you have to go check my previous videos. I'm gonna leave a link both above here and down in the description. But if you just combine them and you know how to work with them, it's gonna be perfect. You have to know where are the key levels, where are the support and resistance areas to make your trades more efficient. What I really want to get into is to use another indicator. So let me delete everything on chart and add another indicator here. So we have relative strength index on the chart. Favorite it and clicking on it. And let me change just the color quickly. Just like before, if you don't know what to change, how does it work, go check the video about it too. So you can see that they both oscillate so similarly. And so what is the point to use one of them or the other one? What happens if we just mix them up with each other? Yeah, we can mix them up, of course, or just have them both on the chart. But remember, I've mentioned this previously. If you want to use the free version of TradingView platform, you only are allowed to use 3 indicators on the chart simultaneously. So if you want to do that, you have to minimize the amount of indicators that you want to use. Later on, I'm going to tell you why we need to combine some of them. So there is a really good way to do that. Let me just clean up everything and search for stochastic again, but this time I'm going to choose a stochastic RSI. Let me make it favorite, click on it, bring it on a chart. So this is by default a mixture of both the RSI, relative strength index, and the stochastic. So now if you're gonna just bring up this is the way, if I want to use this trading as a strategy, this indicator as a strategy, I'm gonna add one EMA to the chart. My preferred one is EMA with a length of 20, and then I'm gonna determine my support and resistance levels. This is the support area down here in green, and this is the resistance area. And then this is a beautiful head and shoulders here. We have lots of confirmations telling us, okay, the price tend to go down, but the neckline of this head and shoulders a little bit is angled. Perfect. We have lots of signals telling us, okay, the price is about to go down. And if I just remove this head and shoulders, we even have, if we're gonna be more precise, we have one double top here too. So but these are just confirmations. We should have taken a trade long before seeing this head and shoulders. If you see it right away, so it's a good signal, you can enter a trade and get your confirmations. But due to the law of the EMAs, we wait for the price to go below it and have a candle close below it. In this case here, it's a mixture of both the price going below the 20 EMA and it is a completed double top. So we know that the price is about to go down because it's on a certain key level point. It's a resistance level. How to enter a trade before that? We have to check the stochastic RSI and we see, yeah, we had a cross down. If you just look at here, you can't see a divergence, but if you a little bit zoom back, you can see that it was one high here, higher high here. I'm gonna mark it just like that, but down below, exactly at this certain level here, we have a higher low. It's not always that beautiful, but it's a higher low. So this is a beautiful divergence happened here. So you have lots of signals telling you the price is about to go down. Then we're gonna mix it up with our knowledge about the candlesticks. So we can see one beautiful shooting star here. We have one bearish engulfing here, but we wait for the price for the candle close, the last confirmation to be closed below the 20 EMA. Then we can enter a trade right away, put our stop loss here and go all the way down to our support level. And it was a beautiful trade, 1.40% of profit with 10x leverage. It was like 14% of profit in no time. And it is crazy good, crazy good. And you can just keep going like that, go for a long trade and go practice. By far, you know how to bring up a chart, how to bring up your trading indicators, how to mix them, because I've told you everything about them in the previous sessions. Practice as much as you can, test them on different time frames, different assets. If you have any questions or if you are struggling with a certain thing which is hurting your mind and you cannot come up with an answer, just let me know. Feel free to ask me down in the comments. In conclusion, the stochastic indicator is a popular technical analysis tool that can help traders identify potential entry and exit points. It works by measuring the momentum of an asset and comparing it to its price range over a set period of time. Traders can use a stochastic indicator to identify oversold or overbought conditions, look for divergences, and confirm signals from other technical analysis tools. However, traders should also be aware of the limitations of the stochastic indicator, or let's say oscillator, and use it in conjunction with other tools to confirm signals. So, did you like what I've told you until the moment? Did you like this video too? Did you like the previous ones? I don't know. If you really like it, leave your opinion in the comments below. Help me out to make better contents for you. If you want to know about a specific thing, or if you think the things that I'm telling you are not enough, just let me know. I would be really happy to make myself better to help you become better. And if you really like my videos, share it with your friends. Subscribe to my channel if you haven't done it yet. That would make me really happy. Thank you for watching. See you in the next one.